Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone riding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next weeks, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market continued to make higher ground this week, with small caps driving the Russell 2000 to all-time highs every day. Monday saw another upside gap to start the week as vaccine delivery started. But comments from New York City Mayor de Blasio of a potential full shutdown of the city brought the biggest downside that we saw all week. Add to that, reports came out that real estate deals in New York are plunging and that the office towers are empty. So they have problems, of course, in New York City. Tuesday, Apple reported that they are going to increase their production on iPhones by 30%, and that lifted stocks to their best day of the week. And also adding to that, and helping a lot, was Mercantile. He came out and said that there wouldn't be any Christmas break for Congress unless they do finally come up with a COVID-19 rescue deal. Wednesday, stocks were firm again, and there was reports that there was going to be a deal and that was very close. So the bids kept coming into the market. And Thursday, everybody was focused on Bitcoin. It was another overnight gap. There's been several of them. And there was a panic buying before the regular session opened, with Bitcoin moving up close to $24,000. Gold and silver joined that party and jumped to the upside. And that brings a revision to our analysis as silver has broken through a key upside level. And we're going to talk about that in just a little bit as we take a deeper dive into the gold and silver patterns and the silver stocks. The tone certainly is around inflation coming back in the market and the dollar falling very, very hard. So that has brought a lot of bids into these inflationary type assets. And we're going to really get a sense for how much upside gold and silver has pretty soon, because we think something has just started in there. Friday, we saw a stock softer, giving some ground, but they really had a hard time falling very hard, as there was a lot of buying still coming in the Russell. So these stocks that are what we'll call very, very small caps are certainly leading the way. I think the stock market might be a little bit soft and some selling coming in advance of the rebalancing as Tesla goes into the S&P 500 on Monday. But that strong Russell really shows you that investors clearly do not fear zombies. That actually sounds like a title for a science fiction movie. Overall, our scenario remains the same for the stock market. We expect only a minor dip in through the rest of this year, and then another rising phase into January. I kind of think that it's kind of a sell the rescue deal mentality that's going on here, because I think it's pretty certain that something is going to come sometime Friday or over the weekend or maybe on Monday. So maybe they're getting ahead of the sell the news scenario as that weakness comes in. Next week, we're off. There will not be a Market Week show because we're going to be taking some time off for the holiday. Our members have received an email saying what's going to be running at askSlim and what will be on holiday. So if you are a member, you can check that email we sent out, and we'll send out a reminder. But be sure to watch the Market Week New Year's special. That'll be on December 31st. So even though we're away, we're going to be doing some things, and I'm going to be doing that research. I've already started it for that December 31st show, where I'm going to look at the bigger picture. That's the longer term patterns for this coming year for the major markets. I think you're going to find it pretty fascinating. For this week, we have stocks moving up pretty nicely, but in a wide range, really. The indexes were up between 1.5% and 7%. The Russell certainly leading the way with that giant gain to the upside. That gain is over 30% for this quarter, which is certainly remarkable and potentially even in the top potential gains for a quarter's time. The bond market, 30 years, they lose about a point. 10-year yields up 3 basis points. That yield curve is a little bit flatter right now, but we think it's going to be steepening. As the focus is on inflation and that dollar declining, I think before you know it, we're going to see a steeper yield curve and interest rates going up. If you watched our Future Speak show, we showed the chart on yields and a pretty good idea that we're going to see the 10-year yields up over 1.2% probably before you know it in the next couple of months. Gold market jumps to the upside, being really led by silver. As I said, we're going to show those charts in just a few minutes. Gold up $42 on the week, a very, very strong gain. Doesn't really get to breakout levels, but we're going to anticipate that happening because silver up $2 on the week. That's an 8.5% gain, and it really tells us that, well, our gold analysis, which we had as negative, well, now we think that's wrong, and we'll show you the update to that. Dollar loses 1.2%. We think it's headed below 88 by March. And oil, a big jump again, $2.50 over $49. And that now makes our objective. We really have done some nice analysis in there. And actually, we think that there is a potential for crude oil to get up to the $52 number pretty soon. So good, strong patterns we're seeing in there. Some resistance between 49, 49.5, and potentially getting through that resistance and doing a bit better. I want you to make sure that you go to our website, askSlim.com, explore the website. You'll see a little thing up on the top that says you can sign up to be a free member. And there's also a way that you can click and see what our holiday specials are. I'll show you the details on that in just a moment. And if you're watching this on YouTube, please do subscribe to the channel. Click that little bell, and that will notify you when we put up analysis. We have been putting up a lot of analysis. Arvi's doing some special videos for YouTube, and he's our cycle analysis expert and one of our vice presidents in the company, and he is just doing fantastic work. And you'll be able to see some of that work and always learn our special method of cycle analysis by watching those videos. So do click that notification bell and you'll know when we post these videos. Like this video, we'll give it a thumbs up. Twitter, follow us at askSlim. And if you have questions on membership, our special holiday offerings, anything on our education and analytical style, or all of our special studies, unique proprietary studies, and we're always building more of those, write to Matt, M-A-T-T, at askSlim.com. So a little bit of an update of what we did bring out for our members this week for levels 2, 3, and 4. Daily, we have our Stock Index Report live stream that is now part of our special chart streams. And the chart streams is now in beta, so the SIR live stream is for shorter term day traders, scalpers, fantastic information. I'm going to show you a little picture of that in a couple minutes. Daily, we also do these chart streams, which is just like we're showing you TV. It's streams of our proprietary charts with our studies on there. That's for level 3 and 4, so if you become a level 3 or 4 member, you'll be able to see our special chart streams. Daily also, our daily snapshot. Matt does a fantastic job on that. Key analysis on the indexes. Daily trade ideas, and that also is done by RV, does these great videos and shows you why we believe something is a buy or a sell. Gives you entry levels, exit levels, or projection levels. That's for level 3 and 4. Wednesday, I do Future Speak with in-depth analysis of the 24 different futures contracts. Also, Wednesday, we put out the Future Speak Minutes. You can go directly to the spot on the video you're interested in, and we put out our Stock Index Report weekly. Thursday, Tools for Techs. Great job by Arvi on this one, as he teaches you how to do cycle analysis and use chart patterns with that. Friday, of course, this Market Week show, we put out a Market Week Minutes. So again, you can click on the time index that you can go right to the point of that chart, and we put out our ETF report over the weekend. So just all of this great stuff and so much more that you can have by all you have to do is be an askSlim member. We have 4 different level memberships and just amazing things coming on. So we're going to do something a little bit different now. We're going to do a little sector review where we're going to look at gold, silver, and silver stocks. Over the past month or so, gold has been extraordinarily weak, and based on our scenario that we had in there, the highest probability analysis, silver and gold were likely to be under some pressure, with gold leading the way in the downside. But silver wasn't as bad, and it didn't really break down. Gold had broken some key levels, and we had believed that the patterns were such that it was going to remain under pressure. It was even happening while the dollar was weak, and that was a good sign that gold was having some problems. Yet copper and platinum, they were very strong. Copper just every day seemingly going up. And with that dollar breaking, it was, kind of an odd scenario that gold would be weak and silver would be weak. And we really wondered if silver's weakness was wrong, whether that was going to turn around and catch on with these other metals in this scenario of much stronger economic growth, which, of course, the Fed came out and they said they're upgrading growth for the next 3 years, starting in 2021 at 4.2%. So all of that growth potential has got copper moving up, and we call that Dr. Copper. So how could silver have all that weakness and be wrong? So we were wondering if that was going to change. And then all of a sudden, Bitcoin went crazy on the upside and exploded as it went to almost $24,000 overnight the other day. And further weakness came into the dollar. And many of the mining stocks, especially silver, started to move up sharply. All of a sudden, gold started to follow and get some bigger up days. And we realized that there was something going on that was different than we had originally thought, and it was necessary for some revisions. Arvi went in, did a deep dive on that analysis, and updated and upgraded, and that is the kind of things I'm going to show you right now, as we are revising our bias to be much more positive in gold than we were. Still no breakouts in there and still has work to do, but silver does look like it's going to drive the way on the upside in here. So the probabilities for declines in gold now are pretty small. We're going to look at the gold chart, the silver chart, the GDX chart, so you can see that. And we'll look at 5 silver stocks because I want you to get a sense for those stocks. So let's look right now. We'll take a peek first at silver. Those of you that are new to our analysis, this is cycle analysis. We look at the repeating rhythms of the market. What you see in the bottom are cycle brackets. The black ones are silver, and the gold ones, well, they're gold. We have overlaid the gold onto this silver chart so that we can see how they work together. When you get declines coming all into one area, like you see right over here, we call that nesting. And that brings the biggest declining period, as you see right over there. If I blow this out a little more, you'll see how this aligns to this cycle way back over here, where this decline came into the nesting period right over there, just as it did here, and just this middle area right over here. What that says to us is that gold and silver are now getting ready to rise together, and silver is driving the way on the upside. So we have upgraded this right now, and this by doing this, we actually had the low in silver over here, and this was just kind of extending out the cycles. Now what happened is you can see by the shape of this that it's gotten up. Now it's getting up into the resistance area right over here, and that's at around 26.75. So we think it should have no problem getting to 26.75, and if it gets through the resistance zones, it begins to move up towards those fib extensions that you see right over there to higher and higher levels. So right now, if they get through that 26.75 area, it's reasonable to think that you get as high as $31 in the silver market, as we have this very, very improved pattern going on now in silver. So silver is really driving it. Let's take a look at how this looks for the gold market. And you'll see right over here, as we look at gold, we're going to show you a little more interesting analysis also in here about the impulses that are moving the market up. But I want to show you all of these cycle rhythms in here and how they align. Again, these are called harmonic families in here, as we have a major, an intermediate, and a minor cycle in there. And then the gray or silver line you see in there is silver. So we overlaid silver onto the gold chart. Look at the beautiful rhythms that are right in here right now on our revision, that you can see the low points right over here, the low points right over here for silver and gold. As we said, they are nesting and have the big upside move. So if we look at this big cycle right in here, from the breakout level right over here, the upside impulse was $380. This one, from this breakout level here, the upside impulse was $440. You can see that. So it's this big cycle, a rally of $440, and then into a correction. This big cycle, a rally of $380, and then into a correction. And if you look at the minor cycle right over here and right over here, you can see that this was a 13% gain off of the low. This was a 24% gain off of this low. This was a 23% gain off of this low. That's this cycle right here. And this was a 24% gain off of this low. That's this cycle right in here, which is now bottomed. So if this impulse is going to get you, well, a 25%, I put it right up there to the top of that extension zone, you can see that what you're essentially going to get is a move up here to, well, 21.85. That's not our call right now. That's just if it keeps following the pattern it is in right now and has been in for a couple of years. Right now we're looking at these resistances, 1894 right over here, 1930, and 1970. You'll note that we have three different scenarios really in here, because the gold market is lagging the silver market right now. So we're not 100% sure whether or not it's going to be able to get its legs and move up sharply or not. I think it's quite reasonable that we get into this middle scenario right over here, which is a test of that 2000 level. And like I said, if it gets through those resistances, then the upside right over here is around 2100. That's that old high right there, and potentially 2185, which is that level right there. So this is a much improved scenario. We have updated this, and we're just trying to get ahead of what could be a decent sized upside move coming based on what we see in these very revised patterns that we had. Now, I say very revised. If you look at this cycle length right over here, you can see it says 26 bars. You can see this one says 52 bars. Those are weeks. Now, before we revised this just last week, this was 25 bars and this was 50 bars. So it only pointed to this old low over here. That's what fooled us, was this move down below those lows to this area of about 1770. But now, by the shape of what's going on in here and by what silver's doing, really we think that the probabilities are high again that we're in an upward phase. Now remember, we are bull-bear agnostic. We're only going to bring you what we think are the highest probabilities when we look at these charts. And this really says to us that now the highest probability, because of this lengthening slightly of these cycle rhythms, is now to the upside. And great work by Arvi, who has done this deep dive and did all this. Note our gold chart is a lot less messy than it was before, as it was finally time for us to clean this up. And you can see again, as we look at this cycle 13%, this cycle 24%, this cycle 23%, this cycle 24%, and that takes you up to somewhere up over here for the same percentage gains over the 2000 level. Could that actually be happening? Why not? The inflationary scenario says that at least for a moment in time, and overall I believe deflation is the risk, but what the Fed is doing, printing all this money and crushing the dollar and looking at pushing the growth scenario up so much, then you get this window of time where asset prices go up, even though it doesn't really help the people. And we could easily see this spike that we see in Bitcoin and that scenario helping the gold market and the silver market and many stocks. Now, gold stocks are lagging. This is the new GDX cycle. It's not changed by a lot, but it has changed. And you can see as it comes down and hits that support area right over here. So here's the gold cycle right there. The blue ones are the GDX weekly pattern you can see. So we have gold cycles and GDX on here for you to see. And where the low comes right in here, it rallies, has a minor dip you can see here, and then comes down. Now, note momentum is still negative in here, just as it is in gold. So this needs to really repair itself and get some more strength. But this is the right place for this to get strength and move to the upside. So when you look at this, you see gold mining stocks, they're not really exploding to the upside yet. That could happen. They could really catch fire. The stocks that I wanted to show you were the silver stocks, because those are the ones that are really leading the way, and investors are really paving the path for these gold stocks to catch up. Let's take a look at Hecla first, Hecla Mines. And here is that cycle analysis, as you can see. And we have it projected up to that target zone right up over there. You can see the dashed silver bracket right in there and how Hecla aligns with it perfectly. There's also a minor cycle that shows up pretty nicely right in here. And now we're into this rising phase, a nice little triangular shape that you see here, and then it breaks out to the upside. Very, very reasonable to see Hecla move up to this $7.65 area in coming weeks, or into this top of this fib extension zone well into the 8s. 856 is that top price right over there. And we think if Hecla pulls back in here, it is a buy and very likely to be moving to the upside again. CDE, which is Core Mining, this is the old Coeur d'Alene. If you were following it way back decades ago like I was, you can see the alignment of the cycle patterns in here. This you could see was almost a breakdown right there, and that's about where we got fooled on the gold chart right at that point. And look what it did. It broke above that resistance right there. That is bullish, and this gives you an idea of the explosiveness of the silver stocks that's going on right now. That upside target 1227 to 1383, as you could see there, and we think that it's pretty reasonable that we're going to see higher prices in this silver stock. Also, really overall, when you look at this, silver really is telling a story. I think you can see that. Here is Fortuna Silver. You could see the same thing in here. See it following the silver chart, the silver bracket right in there, and now moving to the upside. So it had this kind of rectangular consolidation right in here while silver was making a bottom and its minor cycle was making a bottom, and now you could see it moving up. The probabilities of it getting up over that level above $8 are pretty high. You could probably even get into the 9s when you see that. So Fortuna Silver really looking strong when you look at that. Also, I wanted to show you these silver stocks so you really get an idea of what is going on. EXK is the next one I'm showing you in here, and this is Endeavor Silver. Look at that, and you can see that the dominant silver patterns in here are really telling a story as it follows these patterns right in. Oops, I don't want to do that. Let's just make it a little bigger right here. Right in there as it follows those silver patterns. And you can see that what it really looks like is that it's tried to break down also, but now is moving up, and this likely to get well into the 5s or maybe 6s. If I were to do a fib extension on here, it would easily take you into the 6s. I didn't put that on here, but I can tell you that that's really the case. This is interesting because it shows you that when this when this was really weak in here and it tried to rally, it hit the resistance zones. and then when it broke that level, it moved sharply to the downside. In this case, it hit the support zone, and now it's likely to break that level at 477, and we think it really could do much better than that. This is a great example of how silver is really helping these silver stocks, and I think there's a lot more upside in them. Let's hope they get a little bit of a dip in here and you could buy it. Pan American Silver, one of the heavier weights in here, is really lagging when you look at this. Now, it could come to life, and if it takes out the high of that bar, which is at 37.28, it will definitely show us that this was an anomalous break over here. This was the major supports right over there, and you could see that it got down and touched it and then moved up. Big up week for PAAS, Pan American Silver. However, the pattern on this is not as good. It needs to get above that very important level in order to tell you that it has repaired itself and is healthy again. So that would be right above that line right over there. And right now, we would think it would be just choppy until it tells us something different. So this is a really good silver stock. When this thing wants to go, you can see that it really does. I mean, it moved up from $11 to $40 back March through July, August. And this one really explodes when it's ready to do so. So maybe it has another, that looks like potentially 5-6 weeks of just bouncing around in here, or maybe not. Maybe that breakdown was a fake out and it breaks out above that level and then heads up into that fib extension zone. 39 to 41.65 really looks like it would be under those conditions. So a very, very strange pattern in here, but as you can see, silver stocks very, very strong, and all of that has us upgrading the conditions of gold and revising all of those charts. So we were negative on gold. It was acting poorly. The patterns were suggestive of such. However, now things are changing, and we are never, ever going to stick with an idea that the analysis doesn't make sense. Intermediate conditions now in the silver market positive. You can see that in silver stocks. And for our longer term on gold, we're going to show that December 31st. When we do our year-end special. So do watch that year-end special. That is our sector review on gold, silver, and silver stocks. So now I'm going to let you know one more week that's left in our askSlim holiday specials. Give that gift of askSlim. We have these for levels 2, 3, and 4. There are special rates, 3-month memberships. They're non-recurring. So because you're giving a gift, we want to make sure that the person you're giving it to, it's not going to recur on them or you if they don't want it. So it's for 3 months, and they have the opportunity to learn so much from what we present. Give that gift to someone you know who loves trading or investing, or give that gift to yourself. It's great for first-timers that are here at askSlim and just getting a sense for what we do. Use this special to try a higher level if you are already a member for a 3-month period. And we're going to give you a bonus. If you do take one of these special 3-month holiday memberships, we're going to send you an Amazon gift card, depending on which level you buy. So it will cover part of your cost on that, or you can use the gift card to buy a gift for somebody else. So go to askSlim.com and click on that holiday special link on the top of the page. Or if you have questions, write to Matt, M-A-T-T, at askSlim.com. Let me show you what's included here. As we look at an example of our level 4, our top tier, this is our advanced trader level, and our special holiday offer is about 35% off what is an already discounted 3-month special. For $303.75, it comes out to only $101 a month versus our regular $159. Plus, you're going to get $100 back from us as we send you this Amazon gift card. All of this includes our custom Thinkorswim charts, Thinkorswim being our proprietary and favored firm that we work with, brokerage firm, and all of our charts are done on there. And you will get all of our proprietary studies and indicators that work on the Thinkorswim platform. You don't use Thinkorswim? Well, just click on the link on our front page, and we get credit for you opening up a Thinkorswim TD Ameritrade account. So that is the special for our top 4 our level 4 top tier. And let me just give you an idea of what's in it. Level 4 membership, askSlim charts. You get our cycle analysis, key levels, price projections on over 80 different symbols that you can have live on your Thinkorswim platform. You get our proprietary studies, our option bias indicator, market condition indicator, the Slim Ribbon, the new fantastic Slim Ribbon PO, and the Reversal Scout, which helps you stay in the right direction in the market. You can ask, if you're a level 4 member, for custom chart requests, up to 2 symbols per week. Also, if you have any questions about trading issues, we answer those for you also. You're going to get our grid archive, where you're also going to get trade ideas and our exclusive charts on our trade ideas. RV puts out one of those every day and then gives you videos that explains the analysis. You get the areas for entry, you get our projection levels, and you get the levels where to reevaluate if it's not working. The full membership also gives you 500 plus videos that I've recorded and I'll be recording in 9 different categories. So you learn so much about trading and investing, and you get all of our content and services. And if you want info on the special level 2 and 3 members, just go to askSlim.com, click on the holiday deals, and you will see that. Or write to Matt at askSlim.com. A few quick examples of what you get are askSlim custom charts with weekly and daily analysis with our proprietary studies on there. These are cycle charts, as you can see right there. I gave you a little example of the weekly one of this. If you look at the sector review I just did, and there's also the daily in the GDX chart, as you see right there. You also are going to get our SIR live stream. This is available to the gift members of level 2, 3, and 4, and you can see the value of this in here. These are 15-minute charts with the very, very important zones. Those yellow zones are acceleration zones. When they get through them, they're likely to keep accelerating in that direction. And you can see for pair traders, or you want to know which are the strongest or which are the weakest of the indexes, S&P 500, NASDAQ, or Russell. Well, look at the Russell here on December 18th, as it was clearly the strongest index, and you don't want to be short that one, but you can see the S&P 500, the weakest, and that's the one, if you wanted to sell, that you would be leaning to the short side. So great information there. And also just a little peek at our Slimulator Rankings App, which is just phenomenal. These are the top 84 traded symbols that you could possibly want to trade. For option traders, it's fantastic. You get our directional bias, which is basically the sum of the evidence of all of those different time frames that we're looking at right in there. It gives you a market outlook for the next 3 to 6 weeks. You also get our weekly and daily charts just by clicking on those, and you can scan and you can sort, and it's just absolutely amazing. That is a look at our special Christmas special, holiday specials. Give that gift of askSlim. Give it to somebody that you know loves the markets, or give it to yourself. Write Matt at askSlim.com if you want any more information, or go to the askSlim website and click Holiday Deals on the top of the front page, and you'll see all the details about the 3 different levels right there. That is what I wanted to show you, and I'm really excited about that. Remember, coming into the final week right now for these gift specials. All right, so now we're going to look at the stock market. Take a 1 to 3 month view as we look at the weekly charts in the S&P 500. I'm also going to show you the Russell, because that's really been the leader in the markets here. Not much has changed really for the stock market since we showed this last. It's still been moving to the upside. We're still looking for a December modest dip and then a move up into January. I'll show you that right now. Let me just move off this Pan American Silver and onto the SPX weekly chart. So this is SPX Weekly. It has the cycle analysis on there. And what we're looking for in here is a modest little correction here in December. Kind of think that potentially the Tesla coming into the S&P 500 might bring some selling in there. Also, it's this minor cycle that we're looking at right over here that is likely to come down. You can see the minor cycle right in here. It brought this decline right over here. S&Ps fell from 33.05 down to 29.37. So that was, a pretty sizable decline right there, as you saw it move down well over 300 points in a brief period of time. You could get a pretty good sized dip right in here, but then we think it's going to move up again. The real risky time is over here. See the yellow zone right over here as these cycles turn down? The yellow zone right over here as these cycles turn down? Well, that's over here. This is late January through early March when the biggest risk comes in. So we think that there's going to be a decline right over here that doesn't amount to a whole lot, and it comes right back up and moves to a new high into this mid-late January period before the risks really do pick up. We do expect that. The pattern suggests the stock market holds up into that mid-January period, but big risks through early March, and that could be a very sizable decline to the downside. We think it's a potential of 10 to 20% or more in that period between late January and early March, as that could be a fairly risky time. Let's just take a look at the Russell, because the Russell is the guiding light here for the market. It's been the force to the upside, and it's moved up into those fib extension zones. I want you to note the beauty in the cyclical patterns in here. You can see this low right over here lines up here. This which brought that large decline right there in March when COVID-19 hit. This modest decline right over here, just a beautiful pattern. We continually upgraded as this was a very bullish configuration, we call it, as it translated to the right side. For those of you that want to learn cycle analysis, go to askSlim.com and click on the cycle analysis workshop and you will learn more. So right over here, this modest decline didn't bring anything, only comes down to the 23%, as you can see right there. And what that does is bring this next big decline up into those fib extension zones. So this period right in here comes off of this dominant cycle right here, and that's how this projection came. And you could see it moved up into the projection zone. Again, a minor cycle right in here, pointing to a modest dip coming here in December, maybe to the first few days of January, and then moving up into January, with a potential to the top of the extension zone at about 2075. Right there. So that's still a good amount of upside that's available, maybe about 6 to 8% potential in the Russell. We don't think it's that much on the upside in the other indexes, but the Russell is kind of overdue for this pullback, and I think that minor pullback is going to come. That 23% fib extension would be the target. That's we'll call it 1860 right now. And that would be about 130 point pullback sometime here in December, and then again moving up. And then you can see here from this period late January into March right over here is that period of the biggest risk, and it could come all the way down here to that 38% into the 1500s. So that is a good look at the Russell in what has been leading the market up very significantly. Remember, the fourth quarter, which began right over here through these gains, is more than a 30% gain. This is just absolutely huge. And momentum, as you can see right over here by this, our momentum indicator, the whole moving average, clearly screaming on the upside still. I'm going to go back to that S&P 500 chart really quickly so that you could see the momentum in there and how that turned up right here and clearly gave you this really good sign. Had this fake out right there that I admit faked me out also, thinking that double top was valid, but now momentum still very strong. So overall, the momentum in this market is very strong. It's why we think that if it does have this dip into late December to the first week of January, that it will then be moving up again into the late period in January as buyers come in for one more feast at these incredible high valuations that we're looking at. Remember that it's going to take a massive amount of growth for this to make any sense, especially earnings growth, which we don't believe is going to be there. And right now, stock market valuations at incredible levels. The Russell, just want to make this point when we looked at that, the PE, most firms are showing around 30, 31, except they don't count the losing stocks in there, the stocks that lose money, the zombie stocks that are in there. If you take the real earnings, add up all of the 2,000 stocks earnings, and count the companies that lose money in there, the Russell doesn't earn any money. And if you take the forward PE for the Russell, which they're all expected to do a little bit better, that would be 130. So we're at astronomical PEs for the Russell right now. We said it probably has 6 to 8% more on the upside, but we think that's going to bring some massive selling when the realities come into the markets, and that we think will begin starting sometime late in January. That is it for this show. I hope you have found it absolutely immensely interesting, and make sure that you do go to our site and explore askSlim.com. Go to YouTube. If you're not watching this on YouTube, subscribe to the channel, click the bell, like the video with a thumbs up, and watch all of our members' videos that we post up there in the playlists, and also past shows. You can learn so much from that. Follow us on Twitter at askSlim, and for information on our membership or questions about anything else that we offer, do write to Matt, M-A-T-T, at askSlim.com. Remember, we are on vacation next week. There will not be a Market Week show, and then you can see our special New Year's show on the 31st of the year, which I think you're going to find fascinating. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been